Sorry.
No, that's great.
Okay, are we got questions, discussion?
Yes, we do. A bunch of them.
All right, my joke of the day though, because Peter Bookvar wrote a piece this morning. Sports last Thursday, a Wayne Gretzky rookie card. Anybody see this?
No.
From OPC, in perfect condition, rated 10 by PSA, was auctioned off for how much? Come on, a Gretzky rookie card.
Geez, I don't even know. I wouldn't even know how to do it. So 50,000.
$1,290,000.
Holy cow! How is that possible? He's still alive.
Yeah.
He's young.
Yeah. And the same card, the exact same card, sold for $465,000 in 2016.
Those must be incredibly rare, huh?
The Topps version is also the same gem mint condition, sold for $720,000 versus the 200 it went for in 2016. While it's technically a paper asset or actually cardboard, it's really a hard one. So my line, Peter and I have been going back and forth all morning. So I wrote him, I said, see, you got to skate to where inflation was, not where it is, not where it was.
Wow.
A play on Gretzky. So
that's really crazy. That's a really great example of it.
Okay.
Too. We've got, I found
that's my joke for the morning.
That's awesome. And I found Henry Aaron ball the other day. A signed Hank Aaron ball, Hall of Famer with it, you know, the old man had it. It's only worth $250. $250. Now, you know, it's not a very
$250?
$250. Yeah. One of my brothers looked it up.
Okay. So I have a ball that my brother, the infectious disease doctor, got at an infectious disease conference. They had Mickey Mantle and Willie Mays there. So he was one of the few people who got both their signatures on the same ball because they wouldn't do it.
Ooh, I wonder what that's worth.
I don't know. Then my daughter, Lizzie, who was a Met fan. So when I was doing a lot of currency business at Citibank, there was a guy there. He turned her into a Met fan because she used to talk to him when he would call to close out my books in the late afternoon. So he would send her Met hats, jackets. And so in '89, when the Mets and the Cubs were in for the division championship, you know, it was coming into September, and Tony Bongiorno, you know Tony?
Yeah, oh yeah, of course.
So T-Bun's father, Sammy, was the head groundskeeper at Wrigley Field.
Oh, I didn't know that.
Yeah. So Sammy used to ask, because I had such great seats, he'd say, you know, he'd always ask Tony, because his cousins would come in. He said, hey, can I get a, and I'd give the seat. So he'd always, what can I do for you? I said, you can't do nothing for you. So then I said to him, hey, my daughter's a big Met fan. This is '89. I said, if you can get a ball autographed, he said, who do you want? I said, Strawberry, Hernandez, and Gooden. So she's got a ball with the 3 autographs. We call it the Notorious ball. I figure if I cut it open,
that's beautiful.
Oak or something.
There'll be a lot of white little powders coming out of it. That's great.
Yeah, it's the Notorious ball. That's what we call it. So
I had a Mickey Mantle. We used to go to Mickey Mantle and Roger Maris's golf outings every year. My dad and my uncle, his brother, owned a bar, Moose Scourin from the Yankees.
Oh, yeah, sure.
In Cicero. So we would go every year. From '89 till I was like 20, my first trip. So '88 to, my gosh, I think till we had kids is when I stopped going. And those, my gosh, we had so much fun. My first year going to Mickey Mantle's, it was in Joplin, Missouri. We had Billy Martin was dancing.
Wait a minute. Joplin, Missouri?
Uh-huh. Yeah.
Why were you in
Joplin, Missouri.
Why?
That's where Mickey Mantle had his celebrity golf outing.
In Joplin?
Joplin, Missouri. Yeah. And one of the greatest lines I ever heard was from, Jimmy Dean Sausage,
Yeah.
that guy. So
Yeah.
he was also a popular singer, I think, right?
Hmm.
Okay. So Jimmy Dean got up and said, man, I'll tell you, it's been my dream to play at Carnegie Hall. It's been my dream to play. And he, named all of these big world famous places. And finally I've achieved the pinnacle of success as a tent in the middle of nowhere in Joplin, Missouri. It was a great line, and it was just a lot of fun.
Let me tell you something. My son, I only have one, I have 3 daughters and a boy. My son went to baseball camp. There's a famous baseball camp in Miller, Missouri, which is about 15 miles from Joplin. Michael Jordan went, I mean,
Yes.
and you live in Quonset. It's so raw. All you do is play baseball 14 hours a day. You're up at 7, you play baseball. So we flew to St. Louis. I rented a car, just him and I took him there and dropped him off. I had no idea what I was dropping him off at the first time I took him. It was so raw. It's in the middle of Shittsville. And all you see, it's like Field of Dreams. There's 5 baseball fields there with these giant stanchions. Otherwise, it's the cows sticking their heads through the fence to watch the games. That's what it is. So when we went to pick them up, we drove from Chicago. I had a big van. So my wife and I went to pick them up with one of my daughters. And I'm driving there, and she says, "You're lost. You have no idea where you're going." I said, "I know exactly where I'm going." She said, "There's nothing here." I said, "Watch and learn," because we were going to go watch him play a game or two. And there were the lights with this. She goes, "Oh my God." I told her when I dropped him off there, I had to pull over to the side of the road by Springfield, Missouri. I was crying. I just left him here. He doesn't know a friggin' person. I crying. I said, "How can I leave him there? He's 13 years old."
That's great. Holy cow. That's great. By the way, his book is awesome. I've gotten through a large part of it.
It's really good. Thank you. I'll tell him.
And I've gotten through a large part of it. I would love it if he was able to come on one of these days and just come in and talk to us.
Oh yeah, in fact, I talked to him the other day for a long time, which has been unusual. He's on the radical COVID people. I've got my spectrum. My daughter and son down in Florida, they're on the right end. I got my daughter in New York, who's just went back to work, is in the middle, and my son they're nuts. They'll probably come out in 2023, I figure.
My oldest daughter's like that. I felt so bad for her. She didn't want to come. I mean, she wanted to come to my father's funeral in the worst way, but she's terrified to leave.
Yeah, I've been to Zoom funerals. It's kind of interesting.
It is.
Okay, where are we going here?
All right, so let me pull up my emails, for God's sakes, or my questions. So Jim Tassoni asked a question.
Wait, I on the latest blog I wrote, Sunday Night's blog.
Yes.
There's some great commentary going back and forth.
Yes, there was.
So I advise reading it, by the way.
That was actually Mike Temple is always my favorite guy to read.
Just got off the phone with him.
Oh man, he's always my favorite guy to read, but I'm really beginning to like the guy Dave.
Dave's. He lives
Richards.
Dave is in Singapore or Hong Kong. Oh, hold on one second. Let me see. Oh, no. He's Dave Richards, really good. I'm not sure of his background. I've never talked to him like I talk to Mike Temple all the time. Mike Temple was interesting because he's a Harvard guy, and then he went to work for Cargill in Des Moines, Iowa, doing the bean crush. the physical being crushed.
Wow.
So that's why when he writes about what he wrote about with his soy oil,
Uh-huh.
and he admits, he said, I haven't really paid attention to it, but that's what our phone conversation about. Very interesting guy. And not that he went to Harvard, that I give a shit, because I know a lot of stupid people who went to Harvard. But the fact that he went to Glenbrook North High School and he didn't come from money and earned his way into Harvard, okay, that's the kind of person I want to talk to.
Yeah, you and me both. Absolutely. Right up our alley, both of us.
Yeah.
It's just, I mean, really, it's so, when you guys have a chance, go to, well, we posted all of Ira's blog posts are posted in our room.
Okay. All right. So I caution that because there's some, you know, and that's when I'm really writing and feeling good is when we're having those discussions. I had this conversation with somebody yesterday. Over the Joseph Epstein article in the Wall Street Journal over the weekend. It was a woman who I have a lot of respect for, and she's pissed because people just try to shut down discussion. And I said, look, when I write the blog, I'm not writing for, again, I'll say it over and over. I don't care. I don't need your validation. I need discourse and dialectic to try to ferret out even better ideas and opportunities. Validation, don't need. So yeah. I like when we're going at it in a respectful, constructive way. So,
yeah, absolutely. That's how we learn, isn't it?
Exactly.
But nowadays, everybody just wants to stomp their feet, get mad, and yell louder.
Yeah, and everybody wants to be loved. I got 2 on 1, so I've been cleaning up dog shit all night. So,
that's great. Everybody wants to be loved. Not enough people want. That's right. Not enough people want to be respected or feared, for that matter.
Yeah. Well, there's some who want to be feared, but for the wrong reasons. So.
Right. Exactly.
All right. Okay.
So Jim Tassone, Jim is the former fund manager, started his own fund. We spoke to him a week or so ago, and I hope he's here, ready to unmute because he's got a good question, I think.
Okay. They're all good questions. So.
If and when, well, now that we've got it, if and when we get a vaccine out to the masses with all this money that's been pumped into the system, do we begin to see inflation as the economy begins to ramp again due to pent-up demand? And does this force the Fed to finally begin to normalize? And this goes, I love this question because it goes to your blog post last week, I think. Does this force the Fed to finally begin to normalize, subsequently rendering many of these high-levered companies, airlines, industrials, etc., essentially insolvent, as they will be unable to refinance debt at rates that their cash flow can't support? Ultimately, could the vaccine be what sends us lower, I guess, is the question.
Well, okay. So that is, of course, the great question and a very important question. In today's FT, Mohammed Al-Arian people are starting to write to this. My point in discussing the yield curve control is, and I'll put this back to Jim. So if rates start to rise, okay, they've been writing Bloomberg about 1%, on the 10-year. Mm-hmm. But let's return, historically, real yields, that's inflation minus the interest rate. So if inflation was 2% and the interest rates were 4%, the 10-year was 4%, you got a real yield of 2%. Okay. That's easy to follow, right? So right now, Jim, we live in a world of negative real yields. Again, the emphasis is on real, not nominal, real yields. So with, the 10 years hovering at 92 basis points, let's say, and let's use the government's inflation numbers. So let's say that inflation is 1.5, and I can all see you're laughing. Well, let's say that. And So that gives you an effective negative yield on a 10-year note of negative 60 basis points. Why people are buying tips, because tips are built to, you can buy on an inflation-based return. But if you're just buying a 10-year note right now, it's 50 basis points.
Okay.
So let's say you don't want to go out 10 years because you're concerned that that's the case. I'm going to buy a 1-year note. Okay, so what are you getting? 10 basis points? 15 basis points? I'm probably being kind. So you're buying a note that is right now, before taking into what you're talking about, is yielding a negative 135 basis points. Why?
Why?
Well, there are certain people who have to do it. And for other people, they'll go, well, if I put it in the bank, I'm getting 0. And I have some deposit risk. Here I'm buying okay, that's what's going on in Europe. So people will say, instead of putting money in the banks, I'll just buy short-term sovereign debt. But we're at negative real yields. This is the issue. Now, conspiratorialists will tell you, and there's truth to it, by the way, in this conspiracy, the Fed has to sit here now because as the government debt ramps up, they can't afford for interest rates to rise. Because if you look at what the interest costs on the debt is right now, it's, I think, at historic lows, even though we're at historic highs on the debt. Once interest rates start to rise, and if they rise faster than nominal GDP, the ability to pay that back is really going to become, it's not difficult because, again, you have a printing press, you can print all you want. But what happens is, initially, the interest cost on the debt, which is a budget item, by the way, rises, and now you take away from other types of discretionary spending. And this is where the politics is really going to get ugly. That's what the issue is here. Now, this situation, and you can go read about it, go Google the Treasury Accord, what took place in 1946 to 51. Actually, the Treasury was putting a lot of pressure on the Fed not to raise interest rates. Why? Because there was a massive amount of debt built up from World War II that needed to be repaid. And if the interest costs would have risen, it would have thrown the whole budget process out of whack. So the Treasury kept pushing at the Fed to keep rates on hold. And that's when Carmen Reinhart has done some great work on financial repression, because by not raising rates, they were killing, bondholders. But somebody's going to pay. You always have to remember, somebody is going to pay. If you raise taxes, the wealthy are going to pay. You let inflation run, the wealthy don't mind inflation because they're much better adept at, you want a $720,000 Gretzky card? Well, I guarantee you somebody with $400 in the bank is not buying those types of assets to protect themselves. Okay, so that's where you get, this is where it all turns ugly at some point. I can't tell you when. But I will tell you this, that's why they're going to be reticent and try to hold rates down as long as possible, which is why I talk about the yield curve control, which is, they'll say, we're just buying everything on the long end. Go ahead. You want to sell it? You think you're going to push rates higher? Bond vigilantes, good luck to you. Right now, they don't want to go that route, because when they were discussing it, and again, I can cite you Lael Brainerd, who I think is going to be the Fed chair pretty soon, because she's been the biggest proponent of yield curve control. But the Fed has gone quiet since about July, early August, in not discussing it. You don't see them whatsoever. That's why I'm interested in tomorrow's press conference. I'll be listening very closely on yield curve control. because that's going to be interesting.
If the Fed starts getting into yield curve control, directly into yield curve control, then what will that do to the dollar?
I think it hits it hard, which is why the
Yeah.
dollar, I think, outside of what I initially talked about in May, late May.
Yeah.
But if you go to where there were a couple speeches from Brainerd and maybe Richard Clarida about yield curve control in May, June through July, the dollar started coming off a little bit harder. That's when we had dollar, and I was bearish, very bearish the dollar because that was all part of it. Then since August, there's really been no discussion about yield curve control. There's been discussion about a lot of forward guidance and what they would do or would they change. And that's what people are waiting for tomorrow to see if the duration discussion takes hold in a bigger way. So that's, to me, what's so critical is where's the discussion about this? Because yield curve control, they're just going to have to be very, very, very careful about watching rates here. And again, this doesn't come from left field. There's precedent for this. Go Google Treasury Accord, and that was the end result. Did they finally let the Fed start raising interest rates? I believe in 51. Inflation in 48, I think, got up to 8 or 9%, and interest rates were very, very low. You were running a negative real yield, I think, of about 6 or 7%.
In 48?
In 48, yeah.
Where did rates go from there? Did they raise them or did they bring them down?
Well, they started letting them go up. That was part of the deal. And then they did Operation Twist, where they were holding down, the Fed was actually holding down long-term rate, but they did during the Kennedy years. Here, let me go Google to see what inflation was in 1948. Let's see, that should be pretty easy. So I'll give you some color to this. What was the U.S. inflation rate in 1948? Oh, I'm sorry. It was 47 when it was 2.99 according to this in 48, but in 47, hold on, it was over 8%.
Okay. That's interesting.
Because then they went into a, so let's see, come on, should do better than that. So this is the things that you do see. Here's the, of course, everybody's got to get their, and they would not let the, here, 1948. So it had an annual, in January of 48, an annualized inflation rate of 10.2%. Then it was 9.3 in February. I'm just reading off of the Bureau of Labor Statistics information.
Hey, Matt.
Yeah.
Can you hear me?
I can.
Yeah, this is Jim. I just wanted to kind of add on or ask a follow-up if that was okay.
Please.
Please.
So hi, Ira. Thanks. Thank you for answering the question so far. And I guess where I was thinking or trying to go with this question was, so as far as inflation or interest rates go, historically, and maybe you can provide some color on how that affects, and I know there's a correlation, but for the group, how that affects corporate financing going forward, because that's one of my concerns. And just for an easy example, let's say whether you have a cruise line or an airline or one of these industries that's been hurt. Let's say when we went into this, they had revenues of 100 million and expenses of 70, so they were netting 30 just for easy math. When we went into the depths of this, let's say they went down, now they've got revenues of 20 million. And now let's say when we ramp back up, they ramp back to 60. So it's a threefold increase from the bottom. So it looks like they're hitting on all cylinders. They're doing great. They've tripled their revenues from the bottom, but they're still only at 60 million in revenue with 70 million in costs. Then if you factor in an increase in their financing rates, let's say that cost goes from 70 to 80 to 90, and all of a sudden they went from having a $30 million profit to a 20 or $30 million shortfall, and they become essentially insolvent. And that's one of my concerns for companies specific in general, and obviously the broader markets and the economy if that comes to fruition.
That's exactly right. Okay. So there's now starting to be a lot written about it because, in fact, somebody put out in this morning's Financial Times, there's an article by that guy, Robin, whatever, about how the Fed did a study, the New York Fed, dismissing the concern about zombie corporations. You can find it. It's in the FT today. So there is this talk because they're watching the corporations, and I just read the Licio report. They get my blog, so Philippa Dunn, who I like, sends me the report. So it's out they put out a day ahead of time on unemployment data, and then tomorrow's retail sales. But she always adds color. Her and Doug Henwood, one of my favorite left-leaning economists, and they're talking about, they talk quite a bit about what you're talking about. And let me help you a little bit, Jim. So here, under non-financial corporations, let's see what they say here. Corporate America had a very good quarter, meaning the third quarter, with pre-tax profits up 44% taxes. For the year, pre-tax profits were up 11%. That took corporate profitability profits from, let me see what it says. From, what is it that they're speaking about? I'm sorry. I wasn't ready for this, but this is a very good question. After their profits up but their distribution of funds, okay? So they talk about internal fund from we're up. Capital expenditure, that left free cash flow, which is what you're interested in, 1% of GDP for the big corporations. Corporations have some money to spend, but they've been spending a lot of it as they've taken on more debt because they did a lot of borrowing, and this is what you're concerned. And what were they borrowing for? To pay dividends and to buy back stock. But something is going on now where the buybacks have calmed quite a bit. Now we're in the middle of some massive IPOs, but their debt levels are historically very high here. So this is a concern because they've taken on the debt, and see if they have floating debt and rates were to rise dramatic, or when I say dramatically, if you go from 1% to 2%, 2% to 3%, that's a pretty dramatic rise. And we actually saw the effects of that in 2018, by the way, right? As Powell was shrinking the balance sheet and raising Fed funds. I think the Fed funds, where did we get up to? I don't know if we ever made it to 3%, but we certainly got to 2 3/4, right? While they were shrinking the balance sheet. So money was really getting squeezed. And you saw the impact of it. All of a sudden people started to worry about that. Let's put up, we don't have to guess. I'm going to put up HYG just because it's the nearest at hand. And you see what the high yield corporate bonds, if you look in March, during the height of the panic, in March of 2020, HYG traded down to 68. We're back at 86 now. But it spent 5, 6, 7, 8 days really getting hammered because they were concerned about what you were taught, what you're exactly concerned about. Let's go back. Okay, so I go back. So in 2018, okay, remember what was going on in the fourth quarter of 2018?
It was a great year.
Well, it was,
That was when Powell started raising rates.
Yeah.
well, that was really when it was really tightening up. So now you had HYG. So it started out in January of 2018. High yield ETF was trading at 88. By December, it was down to 70. Let's say 80 down. In a very healthy, well, the stock market in the last quarter of 2018, remember, got hammered. I think it dropped 10 or 12% for the quarter.
Yeah.
Then Powell does the pivot in January 2019 because he realized everything got too tight too quick. So you did see, though, when money started to tighten, the high yield debt markets, corporate debt markets, really dropped probably about 13%. Now, Wall Street analysts will tell you, yes, but the defaults didn't grow because I'll always give you the percentage of defaults. But right now, as Licio and others point out, it's hard to measure defaults. That's why they call them zombies, because with rates so low, they're look at Carnival is coming today, I think, with 500 million in a bond. So
Exactly.
if you're a corporation that's struggling, but you have enough assets, Carnival has assets, so so they can issue debt, longer term debt, and the market is hungry for yield, so they can do this. And yeah, they might go into bankruptcy. There'll be a workout. But if you read the covenants in the debt clause, you see, well, maybe that's a doable proposition for us. So again, as long as interest rates, so what we're really saying, as long as interest rates stay this low, is the Fed concerned about corporate America? Well, they were. I don't know about right now. They're more concerned, I think, about government debt, because they're all part and parcel of this now. They're working hand in hand with the Fed. Well, I mean, with the Treasury. In fact, the issue that people are worried about is that I don't mean to complicate this. The Treasury General Account, which is where the Treasury hashes the funds that it believes it's going to need, is up to 1.6 trillion in cash that the Treasury is sitting on in anticipation. So they're worried. Mark Cabana from Bank of America, who's really good, one of the better plumbers, and he's really good, and he's concerned that if the Treasury starts to relinquish those funds, meaning because they do have to under law at some time, that it's going to drive short-term rates negative. That we'll see negative T-bill rates because there'll be so much fresh cash coming into the system, regardless of what the Fed does.
1.6 trillion isn't that a record amount that the Treasury is sitting at?
Yes, by a lot. And supposedly, now I don't know this, but supposedly by August, they're supposed to work it down to 133 billion. Yeah, so there's a lot of things going on under the surface, so to speak, that you have to be attentive to. So, I mean, and the Fed is aware of all this. So, and again, what's Powell's response? We're not even thinking about raising rates.
Right.
And And we see it with the 30-year. Okay, so Jim, this question is great because as I watch my board, and I have all these, I don't have artificial intelligence. I do all the correlations with my eyeballs as I watch. And you could see how at certain times the algos are totally keying off the yield on the 30-year. Why? Because they feel that's where the Fed is least involved at this point in time. And so when it drives rates higher, it takes a lot of assets. Sometimes the dollar, for short periods of time, the dollar starts reacting to the 30-year. So when the long bond is getting hit, the futures is getting hit, you'll see the dollar rally, gold break, other metals break. The stock market used to break, but it doesn't even do that anymore. It's off into a world in itself because rates are still doing nothing. And I would always argue that steepening curves are actually in the short to medium term bullish for the equity markets. But all of these things that I have known for a long time have been thrown up in the air for the last 12 years because of the central banks. And I'm not just talking about the Fed, I'm talking about all central banks have broken the signaling mechanism of debt markets. And where we used to throw the phrase around, I read the other day about it, about what we used to call the bond vigilantes. Because when the Fed would get behind the curve or ahead of the curve, meaning they were tightening too quickly, the bond vigilantes would be driving the bond markets accordingly. Meaning, well, if they were tightening too quickly, the curves would start to flatten because they go, uh-oh, things are going to slow down, and you start buying up longer term debt. When they're behind the curve, they go start selling it because they're reticent to raise rates, but inflation out there and it's creeping up. Time to start, unloading debt. So that was, and the bond vigilantes were really a great market dynamic because they had a history of being very correct and ahead of a lot of other places where I've always put a lot of credence into bonds because I always thought that they were the smartest money on the street, by the way. Now, I don't know what to make of it. So in answering your question, it's finality, Jim, everybody wants to compare what's going on now to Japan. To me, that's a false analogy.
Right.
Japan actually had real deflation. So when people look at Japan, they were in this period, that period. And first of all, it's a false analogy because Japan wasn't the reserve currency of the world. So when they took their bond rates down to 10, 20, 30 basis points, the Japanese yen was still rallying, by the way, even though the interest rate differential was vast, but Japanese investors were bringing money home. It was not a good time for the Japanese, which helped push the yen higher. But another dynamic also took place. When all this was going on in the 90s and early aughts, 97% of the Japanese JGB market, which is their 10-year debt market, was owned by Japanese citizens, either through pension funds, insurance companies, or individual savers. But inflation rates in Japan were negative. They had deflation. So what I told you before about how to, the calculation of real yields versus nominal yields, if you have deflation of 1% or 1.5% and you're getting 30 basis points, your real effective yield is 180 basis points positive. Well, that's pretty attractive. So that when people call it Japanese, forget it. I'm not one in that camp. I think it's a very false analogy, and you have to be very aware. Beware of it. It's a very false analogy. I hope I didn't confuse anybody there. So right now, the Fed and the Treasury are in this together because the deficit has grown astronomically this year. The Fed balance sheet has grown just as big. Fed balance sheet's over 7 trillion. It started the year, I believe, at 3.2.
How does all of this bad news, I mean, I've got a pretty good feeling, but of the answer, but how does all of this bad news continually line up to push the market higher? Just, you know,
What bad news?
well, you know, the Fed balance sheet expanding to 7 trillion. That's not good. The real yields being negative and without any near-term solution, that's just that'll push the dollar down, which is going to I would imagine, well, of course it'll be positive for the market, but what about the taxation issues that brings up and monetary
No, you know what?
unemployment?
Right. All things to worry about, but you know, people will tell you if you're in the MMT camp, modern monetary theory, no
That's
problem.
it.
Printing press, you issue your own currency. And if inflation gets high, don't worry, the voters will vote for a change, because that's what ultimately MMT is based on. But I'm not an MMT for that reason. I have my other reasons, but not a fan. There's right now, man, people would laugh. What are you worried about? No problem.
Right now, nothing.
No, right. So, okay, but and let me just add to this. So now I called up it's trust fund data, and I'm looking at interest rates. So interest rates in 1947, they closed out at 2.125%. In 48, they were at 2.125% the whole year. In 49, 2.125. This was, I imagine this is the equivalent of the Fed funds rate at the time. Okay. Now, in 1937, they were at 3%. In 1938, they were at 3%. In 39, 3%. Now, the economy was stagnant at that time. 37 was not a good year. In fact, that's why I always refer, when the Washington Redskins were going to change their name, I said they should call themselves the 37ers because everything in Bernanke's educational dissertation, doctorate work was on understanding 1937 because it was such a pivotal year in U.S. economics. Because mistakes were made, because the United States was starting to crawl out of the Depression, and actually pretty well, but then mistakes were made. So as the economy slows, even in 37, 38, and 39, interest rates are 3%. In 40, as the war is heating up in Europe, they go down to 2.5%. In 41, now the US economy is totally in full war gear now. There's no unemployment. Everybody's in uniform or working in a defense plant.
Right.
So interest rates are by the end of 42 are 2%. In 43, 1.875%. In 44, 1.875. But there is no consumer demand, and everything that you're making is ultimately getting destroyed. Right? You build an airplane, it gets shot down. You're building, you're making shells for artillery, tank shell, this is all stuff but interest rates are being held low. First of all, because there is no demand. There's nobody to spend any money. Soldiers are away and they're all they are is saving. I know because my father was in Europe sending money home to my mother and my brother who was born in 45. He was born in March of 45. But my parents got married in June of 44. And my dad was sending money home and telling my mother, save it for when he comes home. If he was coming home, because he was a navigator, B-17. So,
holy cow, no kidding.
yeah. Yeah, and that's without any college. My dad never went to college. He was so advanced in mathematics, it's unbelievable. Never went to college, except to go to navigation school because he washed out of being a pilot. He couldn't land at night.
I couldn't land if it landed for me.
So, yeah. So,
You know, a thought crossed my mind just now in regards to the late 30s and heading into World War II. With the Fed now as a social justice institution.
oh yeah, we haven't even gotten there yet.
No, and yeah, you know, and with the summer of unrest that we've had, and the hatred for Trump that I think that was certainly pushed, a narrative pushed by the media, playing into all of it.
We don't discuss politics.
Yeah, no, you know, but all of it, no, and I don't mean to either, but it all playing in together at one of the things that is important, I think, that oftentimes gets lost in history is that African American coming out of the Depression in the late 30s, going into World War II, all of a sudden, millions of African Americans from the South all of a sudden had the ability to be able to make a livable income,
Right.
you know, with so many white kids away fighting the war.
Right.
So what lessons can we learn, or what lessons can the Fed take from those years, since Powell studied that in the 37, you know, pivotal time?
Not Powell,
Bernanke, yes, I'm sorry. What lessons can the Fed extrapolate from that into their social justice ministry nowadays, if any?
You know, that's,
Does that even make sense?
no, that's a long discussion, but let me put this back to you a different way. In reference to that, you've heard the language of meeting COVID, and it's been more than a few people have said it, that it's an act of war. This is war. It's a war on COVID.
Yes.
Because then you're able to generate without really much pushback, right?
Yes.
They got that original $3.2 trillion stimulus package, and I'm not discussing it now. That's not the.
It is what it is, right? It's
with
just a fact.
ease.
Yes.
It was the second one, and everybody who was really pushing for bigger numbers was couching it in terms of a war. So you're on a war footing, you know, and even, you know, Trump got the defense, right? What he called, what was that, hyperspeed?
Yes, warp speed.
Yeah, warp speed. So he had, why? Because it was the Pentagon who really got involved in this. And then to be able to distribute it. This is war. We're at war. We're at war with a virus.
Boy, that's interesting. I don't know. Maybe it's something to think about anyway, you know, and you're
Because
right, it is
once
a
you
long
craft
conversation.
it in those terms, now open up the spigots, and what are you going to say? No to a war? No, we got to fight this as if we're at war. Because that allows you to spend the money and then worry
Yes.
later, if at all.
Boy, that's some interesting stuff.
So that's where we exist. And Jim, I hope that, so when doesn't, I don't know. But right now, I think going forward, and I'm going to be listening for this, not at this Fed meeting, but now that we have a Biden administration, of course, depending upon what happens with the Senate because of Georgia, I think the discussion is going to move to what Larry Summers and others have discussed, maybe even Rogoff, nominal GDP, that the Fed is going to stop targeting inflation and target nominal GDP, which is really kind of the same thing, but more intricate and gives you more cover. Because if you target nominal GDP, hold on one second. Then you can grow your way out of all this debt. That's going to be the hope. Because if I set my goal at 8% nominal GDP and actual growth is 2%, but inflation is 6%, I can grow my way out of here. You know, that's, if you read Rogoff and Reinhardt's book, This Time is Different, the book that was like the hit in 2012 or something. One of their keys to getting out of what was then the fiscal crisis, the great financial crisis, was to get inflation up to those types of levels, because I can resolve a heavy debt overload issue through, and this is the Fed's work. So if you read it in the FT today, they say that people make a big deal out of corporate debt, but bankruptcy in the corporate world, bankruptcy proceedings are far more efficient. They move at greater speed. You do these workouts. So I can restructure debt. I can default on debt. Or when you're the government, you inflate the shit out of the system and you get rid of your debt. That's as old as history itself. When I had great discussion with Mark Faber through the Financial Repression Authority, Matt, you might want to repost that one.
Yeah, that was a great one. I will.
That was really good. We covered the historical. I have to say, we became friends after him and I exchange emails all the time. And I've had a lot of respect for him for years. People, CNBC and those folks like to laugh at him. I wouldn't be laughing at him because they like to call him Dr. Doom. The man is plenty smart and has a lot of wisdom. So we've actually, because he said, wow, I'm not used to talking to Americans who have read that stuff. So I said, yeah, but that's as old as governments itself as to how you eradicate debt. And believe me, again, you always have to ask yourself, who's going to pay the piper? Who's the one getting screwed? You know, it's like the old joke about if you sit down at a poker game and you don't know who the sucker is, it's you.
I love that.
Yeah. So how they're going to get out from under it is, but we can't worry about it right now. Well, you can, as I sent you the book bar piece, you have it.
Yep.
So you can, what people with money are doing is acquiring assets. The art market has settled down a little bit because that got way ahead of itself, because that's where the ultra rich like to play. You can have that world. I'll go to the museum and look at any picture that I deem worth, and I'll be part of the social rubric. Well, I've never understood that. But that's for others to contemplate. Others put in real estate, but it moves. So now I figured they'll come after Beanie Babies again next.
Beanie Babies and Cabbage Patch Dolls.
Yeah. Now when I sell the house, I'm going to really have to comb through this stuff carefully. Toby has a closet full of baseball cards.
Oh yeah.
Closets. Yeah. Closets. He was avid baseball.
We've got a ton of them too. Greatest sport in the world.
Yeah. I'm a big baseball. I have a 1935 championship, National League champion club ball.
Oh my! When did you give up your seats, by the way, to your Cub seats? That's terrible.
17.
Oh my God, those are awesome seats.
Well, you know what? At $500 a game, I wasn't keeping.
No, I know, especially when you're not around. And
you know what? It's just silly. At some point, it becomes silly.
Yeah.
I'm an economist in my heart, so do I get maximum satisfaction? Marginal dollars being no, and I can't sell them. and you really can't give them to people at $500 a day. What am I? Where I used to call up people, go, hey, you want to? Nobody's using the tickets. You want to game? Oh yeah, and even at 120, it's, people, nephews, cousins, I would call them ahead of time, and they would love it. But at 500 about, not happening. And my wife, she says, we would probably go to 25, 30 games ourselves every year. She said, if you even think about it, there's nothing that's on my buy list. And she was right. And she's right. And
Yeah, she was. Doesn't make it any easier to give up, though.
Yeah, you know what? You just, now I'm so happy. I was when I gave them up because they didn't treat me right. And, I wanted to move. And I told them, you can have these seats back. I'll take, different seats, but I'm not spending that kind. That's to me reprehensible. I can give that to Sturch for charity before I would do that.
Yeah, I agree.
And you can't sell them. It's like the seats in Yankee Stadium when they went to those those club seats, which the Cubs modeled it after. And I know a lot of people in New York who had them, 2, 3, 4 tickets. It was $1,100 a game.
Oh my God.
And
You've got to be either super rich or corporate tickets.
Yeah. And you look and it was empty. Because what do you do with them? You can't sell StubHub.
Hey, I want to, before we move on, there was a question Robert Wojak asked earlier that I wanted to kind of circle back to. When we were talking about, where is it? Why is there deposit risk putting your money in the bank? Can you explain, please?
Well, because it's only insured up to X amount of dollars, right?
Does the fact that the FDIC is so underfunded, does that come into play?
FDIC is not underfunded, by the way.
It isn't. I thought it was.
The FDIC is an insurance account.
So it's just print.
The banks have to pay, but at low rates, yeah. But it's really not, because they played with it. Like they raised the account minimums during the great financial crisis from, what was it, 250 up to 500 or maybe $1 million, because they didn't want the money fleeing. So the government stood behind it. No, it's just, there's some shaky banks. And you won't find out who's shaky until we get to Jim's, when rates start to rise.
Yeah. And the dollar starts to fall again.
Yeah. And they got non-performing loans, we'll look at everything. But right now, everybody you talk to, and to me, the best bank analyst out there is Chris Whalen. I love Chris.
Yes.
But banks have a pretty good cushion now. Because the money is free. Although there was a recent one in Kansas, I know Robert, who I really like, talked about it.
Robert Seco.
Yeah, and it alerted me to it. But right now, banks are pretty flush right now. The stock prices are weak, but that's for other reasons. They just can't make money. So it's hard to make money in depressed, rates, because those who need the money, rates are high, and those who don't need the money, they can have all they want.
Yeah, right. All right. So, I mean, that's what banks are going to be lending a 30-year mortgage at these rates? Who is going to be able to get credit at this point? That's another question.
Yeah. Well, listen, but the real estate market's still pretty hot. But you know what? The people who are buying are putting more money down.
Have to, otherwise you're not going to get it.
No, that's right. And there's still a problem with jumbo. 2 years ago, I refinanced, and it was like jumping through friggin' hoops.
Isn't that amazing? It's just I think if I was Powell, I would not be sleeping. I'd be up all night long worrying about every damn thing. There's no safety net except for continually printing money. They don't have any, and I love the way that you put this, they don't have There's no safety net. There is no exit strategy. And,
Oh, there's no exit strategy. Listen,
that's scary.
that's why people laugh, or, I've had many arguments because oh, Powell's done a great job. I don't know what that means, to tell you the truth, that Powell's done a great job. I would tell you that, no, I'm not sure about that, because the Powell pivot, he's made many mistakes. Now you could say, well, at least he admits them. Yes, that's true. But if I was Jerome Powell, now that Biden has made it through the Electoral College and he's president, if I was Powell, after this meeting, I'd call him up and say, Mr. President-elect, I think you should have your own Fed chair. I'm available if you want to keep me, but I'm telling you, I'll resign. And if you want to appoint your own, whether it be me or anybody else, appoint it. I think he's a fool not to do that. Because why do you want to stay here? Now all of a sudden it's just ego. Well, I can solve this problem. Really? You could go back to private equity, because he came out of the Carlyle Group, and make a boatload of money. You're 67 years old. You got 5 or 6 good years left of earning. You'd be on the lecture circuit. I'd be hightailing it out of there, and I would do it with grace by saying, Mr. President, I think you should appoint your own. I think you should have the right to appoint your own Fed chair. And they need Lael Brainerd. I'm telling you right now, Janet Yellen is yelling for Brainerd in her own head, because they are going to need somebody who gets behind the yield curve control game. And they're not the only ones. I would argue that that the ECB is in practice actually doing a modified yield curve control. They don't do it by duration. They do it by sovereign debt. So here this morning, okay, this is a fairly astute group. Let's run through some interesting data this morning. Okay. Everybody with me?
Yes.
Quiz time. What is the yield on a Greek 10-year note?
Higher than what it was the other day.
That's not an answer.
I know. Who's got that? Come on. Negative.
You afraid?
Come on. Somebody's got to answer it. All right, 10-year, I'll take a stab at it. It's got to be negative 0.3%.
No, come on. Greek 10-year debt.
I don't know. All right.
Okay.
Up 1.2%.
1%. 1%.
Okay. So let me ask you, what's the US 10-year today? Let's start there.
Today, the U.S. 10-year, it's at trading at 137 handle. So that would be 0.56% is Greece. The 10-year is trading at just under 1% someplace.
It's 90 basis.
So the Greek
It's not-
10-year has to be 18%.
Wait. It's 90 basis points on the US.
Okay, yeah, just under 1. All right.
Okay, so where's the Greek?
18%.
Holy moly.
55 basis points.
What?
Wow.
Yep. I'm not going to ask you where Japan, because Japan is 0. They hold it there. Where's the Italian yield this morning on the 10-year?
0.4%. So
It's 55 basis points.
55 also.
Well, it's a little less than the Greek. Yeah, right around there.
Jeez Louise.
So do you see what I'm getting at here? So how is that possible? Seriously.
How is it sustainable?
Well, it's sustainable as long, don't forget the ECB has a printing press to quote, Jerome Powell and others. So as long as, there's no fear of default and what they're doing. So instead of yield curve and buying just 10-year duration, they pick different sovereign debt amounts to buy, right?
Ira, has the yield on the Italian 10-year ever been this low, or Greece for that
No.
matter?
Nope.
These are all-time lows.
Yeah, but it's all time low. What's the German today?
Let me look.
This is not cocktail party. But this is serious stuff. Really, really
Saw some
bad.
crazy volume. That's all.
Germany's still negative.
Negative 62.
I know that. Oh my gosh.
Okay, so I'm just trying to.
Hold on. Hold.
Go ahead. Is somebody muted out?
I'm trying to delineate out how broken the bond markets are. And when we talk about yield curve control in the US, we're not effectively doing it yet, but the Australians are doing it out, I think now to 5 years. So the 10-year Aussie is at 96 yield, but they're controlling, I think the 3 is definitely at, because that's where their emphasis has been on the yield curve control from 3 months to 3 years. But the Aussie 10-year is at 96 basis points. Canada's at 72. But the fact that, France is negative 38. Negative 38. Austria is negative 47. So I get tired of hearing it. Even Britain, right? We're terrified of Brexit, right? You have an idea where the yield on the British 10-year note is?
On the gilt?
On the gilt, thank you. Yeah, on the gilt.
134.
About 22 basis points.
Oh my gosh.
Yes. Okay. So now you tell me how interest rates have any sense of reality. And if you want to argue secular stagnation, I'll argue that. But this is all due to central banks. And this is really all form of yield curve control. The ECB is practicing it. So the United States could go there. And if Powell doesn't want to be a practitioner of yield curve control, this is the perfect time for him to bow out with grace. And this is like Michael Jordan retired with 6 championships. Because everybody thinks you're a star, you're brilliant, okay. This would say good on you. Get the hell out of the way and let's go.
Do you think he'll wait until Biden will make a decision, or is he going to bow out beforehand?
Well, he should just call him up and say, Mr. President, I think it should be you who makes the decision. Now, I'm here to serve if you wish to choose me. I think you should have that right as a president.
Before we start to wind down, there were a couple other questions that I wanted to get to too.
But Powell would be like, at a 7th grade spin the bottom. Oh, you guys are probably too young for that, but and people would sit there going, "Oh, please don't land on me." When somebody, "Oh, he's too ugly, please don't land." That's what Powell would be like. Don't pick me. Don't pick me.
Spin the bottle.
It'd be a great Saturday Night Live skit if they had any idea.
I still remember. That's funny. If they had any intention of being funny, that would be a good Saturday Night Live skit.
I could write that one pretty well.
There are a lot of questions. A lot of people had questions about taxes. Shelley had one, and Frank had one earlier.
All right, let's see if we can combine them.
All right, Shelley, is that you?
You gotta hold your finger on it.
Shell?
Yes.
Okay. Why don't you just go ahead and ask Ira your question, since
I
you're on mute.
can't.
That's perfect. Oh, your mom's there?
Oh, I'm sorry. I can't. Are you hearing me?
Yeah.
Oh gosh, I'm sorry. I thought I was muted. I just got in my car.
No, that's all right. The funny,
Ira,
I was
Ira,
just all right.
my
Good, you heard
question.
me.
My question was kind of around capital gains. You know how Biden says that he wants to raise the capital gains from 23% to 40%. And what I'm wondering, do you think he can do that with an executive order, or is that going to be later in the year? And will it take an act of the Congress or the Senate? Or what I'm most concerned about is if he could do it by executive order and then make it retroactive back to January 1st, 2021, and it would affect transactions that you're doing right now.
Okay, that's a really good question. Now, I don't believe he could do that by executive order. I don't believe that, but I'm not a constitutional lawyer, in which I've read a lot of constitutional law, but I don't know that in depth. But that would that would have to go to the Supreme Court, because Congress would probably go, no, that's our authority. So yes, you can do certain things by executive order, but taxation, we can say that tariffs are certainly taxes, but they're not taxes in the same vein. They're a user tax, okay, and not an income or a capital tax. So Shelley, I don't know. It's a good question, but I think that a sitting president would be out of their friggin' mind, because if you did that, you own it. And if things turn down, look out, because there's nobody else for you to point the finger at. So I don't know that anybody would want to do that by executive authority. Yes, if we lived in a dictatorship, that's what dictators would do. Or, if we lived in where there was a king, if he could do it, I'm not certain. I don't think so. I think it would, because again, Congress has the power of the purse, and that's one of it's their greatest power. I don't think so, but it would be, to me, political suicide, because why would you want to wear that? If let's say the stock market collapsed 30%, who do you think gets to blame? You can't point your finger at Congress. You own it. I don't think they'd want to go down that route, but it's a good question. I don't have the definitive answer.
Thank you. There's just so much uncertainty, and it makes it hard to plan ahead.
Well, I don't think you could do it retroactively. That's why you might get some selling here, because I'm feeling the same thing that you are. Do I harvest my gains under the regime that I know? And of course, the Georgia elections don't take place until January 5th. Too late. So you're playing roulette right now. And we're all stuck in that game. But you know what? I've never, as some of my older friends told me for years, never went broke taking a profit. And that's what JP Morgan used to say too. I never went broke taking a profit. So I try not to do things based on tax reasons. It's just been one of my mantras. But I don't mind paying taxes, by the way. That's part of living in a free society. And I've had years where I've been doing this 43 years. So I've had years where I've lost money. So I'd much rather pay taxes, by the way.
You and me both.
I understand. Thank you so much, Ira.
Shelley,
And thanks, Matt.
Really a good question.
Thank you, sister.
Now you've piqued my interest. I'm going to have to go look a little deeper.
Well, let me know if you find out something.
I will.
That is that was great. That was a very good little discussion there. Mark had a question too that I want to get at. Mark Wisniewski is a oil and crude and gas energy trader, and also broker.
Yeah.
So he's asking about. Oh, here, I'll just read it. So many common themes for 2021 is commodity inflation and home prices now higher than they were during previous decades housing bubble and accelerating. The dollar is expected to decline under Biden, with massive spending expected to eclipse the Trump administration. Yellen has stated yet another financial crisis in our lifetime. Oh, wait, yeah,
Yeah, how's that?
there you go.
That'll tell you about Fed forecasting, right?
Yes, exactly. Yellen has stated, not another financial crisis in our lifetime. What do you expect to give?
What do I expect of what?
What do you expect to give? What do you expect that would to give in would it be commodity inflation, home prices continually moving higher than they were in previous decade, in previous in previous times, housing bubble accelerating, the dollar's expected to decline until under Biden with massive, I gotta put my glasses on.
Yeah, well, here, now I'm looking at the field report again that just came out this morning, and she writes at one point about, this will you'll find interesting, and I'll get to the commodity part. Mortgage equity withdrawal, meaning that people start to use their homes for piggy banks again. Which is, of course, which is what helped create the great housing crisis. Here I'm giving it. So how surprising. Though there were many quarter increases in mortgage debt above 1.5, it's curiously strong number. So people are actually taking out, and they're using their homes as ATMs again because the mortgage debt rose by 144 billion in the third quarter, and that wasn't all new mortgages. So people are there's equity withdrawal going on because people are trying to, especially people who've had their workloads cut back, their revenue cut back. The ravages of the unemployment situation are far beyond just the 6.7% rate or 6.6%, whatever the rate was, 6.6, I think. So there are real ravages there. People are trying to use whatever assets they have to sustain their lifestyles up to this point. Now, on housing prices can't keep climbing in the way that they are because we're going to be stuck back in a bad situation again, and you're going to price a lot of people out of the market. I think some people, this goes back to Shelley's question on taxes. Will Biden change, Trump's SALT tax, which Trump did to punish certain blue states, right? By capping deductions at $10,000. I think there are people who are waiting for that to see if that falls by the wayside. Price homes, I think people at the higher will buy more, and I'm self-interest party here because I'm trying to sell a home just outside, basically in Chicago, right on the border. So I'm trying to sell a home, but I know people are looking at the taxes, because if your real estate tax is $30,000 and all you can deduct is 10, well, that's a deal breaker for people. So there are things that are going to have to take place here and changes. But I don't think, for the average home price, you're stretching people now, unless, you think that jobs are going to explode, high price jobs. I don't see it, because there are a lot of jobs right now that people are finding, I don't need to hire people for that. There's some real pain that is still to endure, and the debt loads have grown in many ways. Corporate debt, government debt. Now we're seeing people start to take equity out of their homes. But inflation, is inflation going to raise its ugly head here? Well, if you get fiscal stimulus, now they're supposedly reaching some agreement on $785 billion this week, because the Democrats will back off on some of the urban outlays that they were looking for. But this will stimulate inflation because you've got low money rates and you've got a Fed who's going to be reticent. And let's go back to, again, Matt, what you brought up, but has been one of my battle cries, which is the Fed is now the social justice ministry, because once they went down that path of of Powell several times saying through no fault of their own.
Uh-huh.
So that means he has to hold rates until he sees minority employment back to the levels prior to COVID. That's what you said.
Oh my gosh, we're looking at 20, who knows when.
Yeah, that's exactly right. That's exactly right. So I hope that answer, who asked that question? It's a very
Mark Wisniewski.
good. And I understand why. And you see prices climbing. And I'll tell you what, as I said back in May, and I know I was on with you, May and June and April, the only stocks I was buying, what I called, I was buying ag stocks and mining stocks so that I could sleep at night. So I'll get back in the stock market, but these are unloved. They pay dividends, and it's worked out very well. It's really been, and I'm not a great stock trader, because I'm a macro. I everything is top down in my world. My wife, who's a CPA and really great financial mind, she's a bottom up stock. We are never in sync, because I am a big picture top down person. But this year was really good for me because as I talked about with Faber, and I talked about it's one of my better ones with Louis Gavet from GavCal.
Mm-hmm.
We and I had and I'll reissue it, but you can grab these from the Financial Repression Authority. And Louis and I talked about Freeport McNamara, Bunge, Archer Daniel, and some other mining stocks. And they have really had they've had too good a run. Again, I'm harvesting, and the pun is intended, I am harvesting some of my gains. Although I'm basically out of Archers, but I've actually acquired more Bunge. Freeport, and it's gone up $4 since I got out of the bulk of I still have a rump position, but it's been good. And I can sleep at night. Now, Freeport canceled its dividends, so they're going to reinstate it. And another one of my favorite, Glencore struggles because of its politics. And they also got rid of their dividend so they could pay down debt through this. But with copper prices and other prices, iron ore prices rising dramatically, and as can I call him Wisniewski?
Yeah, Wiz.
As these things are moving even in the energy sector. So these companies are making money. Glencore, who's getting rid of, they're not getting rid of him because he's still the largest shareholder, Ivan Glassenberg, but they paid down some debt this year, which I like to see. I would rather see good companies whose earnings are going, cut out their dividend and pay down debt, and then come back to paying out the dividend. And that's what Glencore. So Glencore was down to $3.50, I think, at one time. Now it's up to $6.20, $6.30. Freeport's had a wonderful run from 7.5 to all the way up to 25. Bunge has been outstanding. So, and these are based on, rising prices. Now, I'll conclude, because if you go read the posts on the blog from Mike Temple and shares, and people are joining into the conversation, this is without any real effective yield curve control yet. They see inflation, but some of that too, I think, because I've been a dollar bear. When the world was firmly in the bullish camp, I said, and I will take a bow, because I took a beating even on my blog for a dollar. But I said, if the dollar, my mantra was for several reasons why the dollar had to go down. Because if the dollar rallied, then the Fed had failed miserably. Because the Fed is not only the lender of last resort in the United States, because of the reserve currency status of the dollar, they're the lender of last resort to the world. And that's what they did. They opened up those swap lines. And if I was Powell, I'd open up them again, by the way, just to drive because the world needs still a lower dollar.
Are you going to be listening for that tomorrow?
I'm sorry?
Are you going to be listening for any
He
signs of that
won't
tomorrow?
talk about it. It won't make it in tomorrow. But that's what I would do, but he'll say, they're happy where the dollar is. A lot of other countries aren't happy, but as we say, there ain't a shitload you can do about it at this juncture. And the world needs, and you see commodity prices. Now, I happen to think, as you know, I went back and forth with Mike Temple. I happen to think the Chinese are stockpiling everything that they can, copper, grain, whatever they can. And why do I think that? Because if you look to see how the Chinese yuan has performed since the crisis, let me put up a chart just so we can. So, okay, here's a really good example. And I'm not going to use it. Well, actually, the high in the yuan is funny because I turned bearish on the dollar on the weekend, Memorial Day weekend. I wrote that blog on the 25th or 26th because of Schweibel, Wolfgang Schweibel in Germany. He did a major pivot on his view on ending. He was the original no to everything for fiscal austerity, but then he turned. So the yuan made its high for the year, May 20, the week of May 25th, up at 717, okay? We're trading 653 right now. That's a 12, 13% appreciation of the yuan. Okay? This is all being done. When the Chinese are busy importing materials, the currency goes higher because you wouldn't import when your currency is going lower because things are more expensive because you have to convert to dollars. Chinese are buying everything that they can. So, Wiz, I'm with you. You see it in that regard. And it's not rampant inflation. It's what there is commodity price inflation going on. And it's not in the energy. The energy world was stood on its head, and the energy world is in a pivotal spot between the movement to non-fossil fuels, which is big. Fracking, certainly, you know, some fracking has been shut down, but you got wind power, solar power, and dramatic changes all the time in this. Natural gas is certainly, you know, with LNG. So there's a lot of things at foot here, but underlying is what things that Dennis Gartman would say, if you dropped them on their foot, they would hurt. Those prices have been rallying. Look at copper prices. You know, and it was copper that drove Freeport McMoran and Glencore, two major copper producers in the world. And I'm not even getting into the precious metals. We'll leave that. But, you know, I did talk to you about platinum versus gold.
Yes, you did.
And I screwed that up badly. That was my worst. That was the worst trade making money I made in a long time. I should not ever, but because that was a $250 move. Even
Did you
with
get out too quick?
fluttering, platinum kept going, and a lot of that was because. Hold on one second. Who is it? Oh, somebody said, is that you, Matt?
What?
Oh, John Goldsberry. Just, you know, John?
I don't think so.
Okay. So, John, as we're talking, okay. Hold on. He said, Goldman guy, this just came across, talking about asset appreciation and low rates. Your mention of the 46 to 51 period is interesting. If rates do stay soft next spring, summer inflation could really boil. This just came on. This just came in a text to me.
That's amazing.
He's not even on this.
No,
So,
he isn't.
one of my favorite people. He used to handle my book. He worked, he got fucked over by, what's his name? John Corzine. Goldsberry was a big producer at Man Financial. Oh, did he get screwed? And one of my favorite guys, really, him and Frankie, two of my favorite guys. And they handled my book. The only currency guys who I would allow to touch my orders, you know, at a desk.
What was his badge?
You know what? That's J something G. What the hell is it?
I don't know if I know.
Yeah, Goldsberry. So great guy. So he just texted me that. He's watching somewhere. They have a Goldman guy on talking about it. So exactly entertaining what we're talking about now. Wiz, you're right on target. Watch it carefully. And you know what's really interesting here? And I know we talked about this, Matt, because I watch soybeans in terms of Brazilian real too. And earlier in the year, when the real was up at 5.9 real to the dollar, you know, because the real was very weak after the onset of COVID. Hold on, bring up my real chart. So again, let's go back to the week. Well, the week earlier in May, the real made the high at 5.97. Okay, 5.97 real to the dollar. It started the year at 4.06. So that was almost a what? A 50% depreciation, 46% depreciation of the real. Soybean prices, even into the Brazil harvest, started creeping higher. And you actually had record high for Brazilian farmers in terms of how many real. So when they when they were selling their beans for dollars, and even beans at $10 a bushel, but if it's 5.9 real to the dollar, you're getting 59 real for a bushel, all-time highs. Very significant. Now they're still getting the same, and the real is back down to 5.04, 5.1 this morning. So you've had a pretty good run back here over that same period of time. My point is, the Chinese are the biggest consumers of everything in the world. And they are stockpiling. Plus, they're busy trying to create futures exchanges in China. So it's in their interest. So they warehouse a hell of a lot of stuff. And that's been with the yuan appreciating fairly dramatically.
They have to feed their people. So that on a base level, they have to feed their populace. And they're not working to become a reserve currency or the reserve currency yet, are they?
No, not yet. Not yet.
But they are trying to increase their prestige in the on the world stage, I would guess, right? So they're stockpiling.
Absolutely, which is why there was and I know we discussed this. This is not new, but I have the piece right here. What's the Gang, the governor of the People's Bank of China, talking about how the title of the article is the IMF should turn to special drawing rights. So again, a move away from dollar. Yeah, they're doing it. They're doing it. They're promoting it. And every time you put sanctions on the Russians, which I'm sure we'll see again when they figure out, who is behind the most recent cyber attack, then the Russians will pay for or will only take yuan for the oil that they sell to China. There's a lot of things going on. And that's what are the two elements that we strive for?
Context and nuance, baby.
Correct. That's what we look at. And that's where, to me, the money's to be made in understanding nuance and digging into the context to really come up with good trades, good investment ideas.
I've got 1,000 things running through my mind again now. Every time we get to this point in the conversation, I've always got. Oh, I know. Thank God, too.
All right, so I'm going to cut it here.
Because a million things to look up, and I've taken 3 pages of notes.
Listen, at tomorrow's Fed meeting, what I was, I have a golf game. Am I going to get out of this or not? What was I thinking about? Fucking dead Fed meeting.
What's the weather like out there today?
It's been cold. When I woke up in the morning, it's 39 degrees. It's like Sunday morning I was going to play at 8:07 tee off time. It was 39 and the wind was gusting at 25-30. I said, I'm not playing. I mean,
You're in Arizona, right?
yeah. I mean, why should I go out and
39.
play in 39 degree with windy wind? Now, by 10 o'clock, it was 50 degrees with the sun shining, but the wind, it's cold.
No kidding. That's
cold.
unbelievable. You can
No,
come
it's-
home and golf in that weather.
Well, it's the way the desert is, it cools drastically at night when the coyotes are howling. But I bought my wife, I just bought her a Hanukkah gift. I bought her night goggles so that we can go out and go on the golf course and see the animals.
Oh, that's nice.
Yeah. And she bought me a telescope because the sky here at night is just unbelievable. Now, with all these apps, you just put it into the telescope and you got to, of course, aim it. It's not that advanced, but it does read like now the Christmas star is there, which is beautiful.
It is. Oh my gosh.
It is. The sky here is beautiful at night.
We had a vacation plan for the week between Christmas and New Year's to go down to Florida. My daughter, her dance thing was going to be dancing at, one of the parks, Universal, and they had just canceled it the other day, yesterday.
Oh, sorry.
Yeah, so very disappointing. So my thought was, well, forget it. We'll go whenever they reschedule it. And let's go to Arizona. Let's go out to Scottsdale for the week and just sit by the pool someplace. But it doesn't really warm up until, summery weather until
Hey,
January.
if you come to Scottsdale, let me know. We'll go play golf.
Oh, you better will.
I'm here. I live on the women's 8th tee. I feel like some days when I'm just watching, I feel like Bill Murray.
That's funny.
I'm a sick man.
You feel like Bill Murray, but only the Northwest Side version.
Oh,
that's great.
Yeah. That I understand.
No kidding. Well, Ira, have a great day, and thank you for spending your time with
more
us.
importantly, my condolences to you and your family. I'm glad you're healthy now, but you're losing your dad.
Yeah, that was rough.
Very respectful. I know what it is. I know the pain.
Thank you very, very much.
Because you want to turn to them, pick up the phone sometimes, even as much as they can make you nuts. And I'm sure my kids say the same thing about their dad.
I did that the other day. I was driving my oldest son, Danny, back to the airport. He wanted to stop on Grand Avenue for pizza at D'Amato's.
Oh my God. Yeah. At the
Favorite place. Yeah.
Yeah.
So we were driving past an old church, an old Catholic church that was closed a few years back on Noble.
Oh, yeah, I know exactly the one.
I couldn't think of the name of it. And I thought, you know what? I'm going to call the old man. He'll know what that church is. He's been to it a million times. And I turned around and I said, "Damn, oh man."
That's a Polish church.
Yes.
I know that church.
Yes, it was, or it is.
I know exactly where it is.
And I can't think of the name of it. It's driving me crazy, and I can't call my dad to find out, and he would know right off the top of his head. He couldn't remember a word. He'd be sitting there thinking, okay, I want to go, take me to, he'd struggle to find the word, but he can remember things going back to, 1930, well, maybe
Sure.
not 1942.
Yeah.
Maybe Techtail. We were talking about maybe Techtail, one of his best friends growing up. Just a few days before he died, we sat there and talked about these stories going back into the 40s when they came to Chicago. Oh my gosh. He wrote a book too, Ira. He wrote a book.
Who, your dad?
Yeah. He wrote his memoirs called,
Nice.
yeah, you'd really
Nice.
enjoy it. Actually, I think The Life and Times of a Nobody. That's what he called it. The Life and Times of a Nobody.
You know what? Outstanding. And for all those who are listening, Santa Mike's campaign is on, and they're St. Vincent de Paul, Marillac is really in need of money.
Do you have a link to it, or I'll just find it online?
You know what? I'm going to tell you what. They did a thing on CNBC News over the weekend.
Sturch did?
CNBC did on Sturge. Hold on. You won't believe who sent it to me. So I'll keep that out of the mix. Let's see.
Judd.
Here. Yeah, it was on, I think it was, Friday. It was on NBC local news about Santa Mike. So look it up. You'll get it. If you can't, call me and I'll get it to you.
I'm looking for it now.
So
Oh God, I love him. I love Sturch.
Mike has been doing that for 51 years. And I'll tell you what, I called him in April, just to talk about what was going on. And when he told me how bad things were and the types of people they were seeing at St. Vincent de Paul show up, middle class and upper middle class people coming for food who were really in bad straits. I have to say, my blog, I put out the call and we raised over $50,000. And
Oh yeah, we donated money to that. I did.
yeah. And Mike said, you don't believe how much of basic foodstuffs, $50,000. He says, you don't know how many semi trucks will pull up here because they were running low. And I have to say, I'm not going to put a name to it, but one of the blog readers came up big, called Mike 3 weeks ago and said, here, I'm issuing you a check for da 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 da. And Mike says, what? He said, I don't, Mike had talked to him because he wrote a pretty big check, nice check back in April. But now for Christmas, he wrote a bigger check. And Mike says, why are you doing this? He said, I read the blog. I've had a good year. He says, I would never ask me for a dime. It's my way to give back. Mike called me. He says,
Beautiful.
You won't believe it. I said, yeah, it makes getting up in the morning and doing this worthwhile.
Boy, it sure does, doesn't it? It sure does.
It does. That's all. You know what? I love doing what I'm doing because here, I just had an hour and 40-minute conversation with you guys. Well worth it. It helps me. I can't even begin to tell you.
Well, you have well, you do. Just from, I hope you have an idea of how much it helps me and how much you've helped me, and not just our group, but how much you've helped me over the course of my career. Just being able to ask questions and my gosh, I know that some of the things that I've said to you would be along the lines of a fourth grader talking to a graduate student, but that's how I learn. That's how Judd forced me to learn.
That's how we all learn. Yes. There's nobody who does it by themselves. Anybody who is a fool. God, I've had so many great mentors. I can't even begin. I still talk to them.
Oh my gosh. Who do you still talk to? Just out of curiosity.
Oh, a guy who ran Morgan Stanley's FX room, who taught me so much. The only thing bad, he's a domer, so I have to give him credit. but Paulie and I, he's down in Florida. We talk a couple phone calls a year, a couple Swiss guys who, you know what? And it's the blog that does it because it keeps current. And they love to engage, and they have such deep knowledge. So we still talk. I can go on and on. Jim Sinclair, you know who Jim Sinclair is?
Oh, of course, yeah.
Well, Jimmy taught me a lot, but I haven't talked to Jim in 7-8 years. But Jimmy's nephew, John Crowley, him and I email back and forth all day, and he's a blog reader, and he knows more about gold stocks than anybody I know. And he's a man of great integrity. He lives in Woodstock, New York. Got out of the city years ago, but phenomenal, great mind, and will poke at things, and it's great. We go back and forth. And there I have a lot of people like that who they won't respond on the blog, but we go back and forth. Mike Temple, who does write a lot on the blog, but him and I have mega long phone calls at times. So
Temple is a really smart guy.
Yeah, very smart.
To meeting him someday.
Very
When COVID starts to, we start to unwind COVID, there's going to be we're all going to be very busy because everybody's pushing off a whole lot of things. But I think that one of the most important things that we can do is to get everybody together. And
Yeah,
you know,
we're going to have a notes from underground convention.
absolutely. God
And-
almighty, would that be great?
And I had never met Mike. You know what? I would just read. I didn't even know who he was. But August of 2019, he was visiting his folks in Chicago for the month, and we had breakfast numerous times down at Cirrus.
How old of a guy is he?
I think he's about 10 years younger than I am.
Okay.
A little bit more. Yeah, no, probably 10 years younger.
So a little bit, so somewhere near my age, a
Yeah.
little bit in the early 50s, mid 50s.
Yep. Yep.
I'm
Yep.
watching the Sturch thing on Channel 5, you know,
Yeah, it's
the
see if you
video.
can find it.
I got
Send
it.
Mike.
Joe Piranunzi's in there.
Post
remember-
it.
Do you remember
Post it,
Joe?
dear guy. Post it on the blog. It's good for people to watch it. It's
It
good.
is. Oh, good idea. I will.
Yep.
I will. Well, Ira, again, thank you for teaching me so much over the years and continually being here to guide my macro thinking and to continue to point me in the right direction. Because otherwise, I just get lost and swim, as you can tell, swimming in a sea of information, misinformation, disinformation.
Maddie, it takes working at it, as you know. And if you're willing to work at it, you can do it.
Amen to that.
All right.
Amen to
Thanks,
that.
everybody.
All right. Thank you, Ira.
All right. Pleasure.
Yeah, always. Thank you. I'm going to put the this video of Sturch, Santa Mike, into the group. I put the link into Marillac, but Mike Sturch, you guys, I've talked about Sturch a lot, just telling stories, because he's just a good man, a good man. And I think that might be the highest compliment that you know we can give each other, is you're, you know, or at least in my mind, you're a good man. That means so much. And Sturch is a good man. Sturch would also kill me in the pit. He would come in and fill orders. He was a broker. He would come in and fill orders, and he would just jam me up, thinking he was helping me. All right, Matt, I sold you 100. I bought 20 back for myself. I sold you 50. I bought 5 back for myself. I sold you another 200. I bought 30 back for myself. I bought 850. And you know, and then he'd give me the prices later. The prices would be favorable, but I'd get turned around, and more often than not, he would turn me around in my position. Oh my Lord. Anyway, and I taught his sons were 2 of the first traders that I had helped mentor. Ryan, and I forget his other son's name, the bigger fella. Anyway, I'm going to donate. Every year we always had a fundraiser for Santa Mike around Christmas time. So a little bit before this time of year, and we would always donate, you know, thousands of dollars to him. I mean, and everything that he puts in, everything that comes into his foundation does go to St. Vincent de Paul, Maryland, or the Marillac St. Vincent de Paul thing. All right. Anyway, everybody, I'll see you back in the other room in Discord in just a minute. Again, great conversation, great questions, great conversations with everybody. And I surely, well, I just can't express the gratitude that I have right now. I was crabby earlier, not in such a good mood, a lot on my mind, but after talking with Ira, you know, it pulls me out of myself and makes me think. And I've got 3 pages worth of notes. We're back in the opening range in the S&P, or just above it. This is not a market that I want to be trading. I'm glad I didn't. I'll see you guys in Discord in a minute. Signing off.